please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Then we're holding on to the 10,500 mark. So that is at least some kind of a positive that we're looking at. But otherwise, markets are sulking. Every kind of bounce is being sold into. Well, the dollar has been quite weak, and that's normally good for base metals. But take a look at what's happened to Vedanta and Hindalco. Both of them have slipped from the high point of the day. Normally, it's supposed to be a good day, right? If you see the dollar index sub that 90, 89 odd mark, both of them selling off as well. Remember, the Chinese markets as well are shut, so you don't really get a sense of what is demand. You will get a sense of demand when, in fact, those markets reopen. So the first week of March or thereabouts, that's when you actually get the sense, because they'll open in the next week itself. But they as well are selling off. And a couple of other ones, India Bulls Housing Finance as well, is taking a knock. One stock that's holding in the green is Infosys. That is still holding with a gain of around 1%. So that's good for the bulls, at least, that's fighting as we speak. But let's get in Ashwani Gujral. Well, his trade early this morning itself was if the Nifty is going to be opening up, the Nifty Bank is going to be opening up, it's a good shorting opportunity. It's the best thing that could happen for a bear. Ashwani, your take on the Nifty, just looking at what's gone on in the last couple of hours from the last time we spoke. Stay short, and if you're staying short, then where would your stop loss come in at?
See, the sense appears to be that you are getting a bit of a pullback. That's basically happening because HDFC Bank, you move it 0.5% and Bank Nifty tends to move. But this is the time to get short on Bank Nifty. I mean, you cannot keep defending the same low every day and hope that something different happens. I would bet that at some point, yesterday and day before's low gets taken out. And there is, tailwind in Bank Nifty. It's not like it's range bound like the Nifty is. So my sense is that good time to take short positions and just keep yesterday's low as a stop, because selling will come very suddenly and, it will just blow the lights out, because the market is sell on rally. There isn't any question about it. Sure, you'll have these little pullbacks because you can't fall all day. But I have no doubt that the banks are getting derated, and finally people will reduce exposure to banks and maybe increase it in IT or whatever. But the PNB story is not over as far as the market is concerned. Having said that, individual stocks, Raymond is a sell with a stop of 950, target of 915. Titan is a sell with a stop of 820, target of 795. And Biocon is a buy with a stop of 606, target of 625.
Ashwani, if you could tell us, you're going short on the Nifty Bank. Currently, it's at around 25,320 or thereabouts. What are the levels you're looking forward to? You're saying that we could see a sharp correction, but more importantly, where should you place your stop loss?
See, the stop is yesterday's close on the Bank Nifty futures, which is about 25,420 thereabouts. What I am playing for is the break of yesterday and day before's low. So let's hope that happens, and then we get a bit of a bigger downside, because the Bank Nifty would have corrected anyway. PNB is a trigger, because the way Bank Nifty went up, there is still a downside here, and if it does break yesterday's low, then we get to the other day's low, which was about 25,050 thereabouts.
Okay. Prakash, good afternoon to you. You concur with Ashwani. What's your call on the Nifty Bank and the index Nifty itself?
Well, I didn't hear him also because I don't have a earpiece.
Apologies. So he says to go short on the Nifty Bank.
Yeah, to me it's a short, because upper regions there are two ways to look at the Nifty. Nifty that we have seen 11,169 was the high that we have seen. That has a target of around 10,097. So I think it's heading there. It's a matter of time. That's the look. That's the way to look at it from a larger term perspective. But on short term perspective, we see that the move that we have seen from recent lows of 10,400 to recent high of 10,618. That's an exact point. There's a strong resistance out there. So that is a reactive up move, which basically means it's gone up, but gone up to come down. So I think the downside is still open. If 618 is taken out of yesterday's high, then maybe we'll get a 100 points rise. But this is a corrective up move. So these rallies need to be shot into. So I feel yes, it can slide down. Today, I would like to sell somewhere closer to around 10,550 or so, and if it goes there, if you do it, the good chance it can slide down to closer to around 10,450. So far it looks weak to me. I don't see strength.
Okay, what are the stocks you're looking at?
Two stocks, both on the short side. I'll go for Bank of Baroda. That looks weak. We can see a slide to around 153 zones. Stop about 158 should be fine. India Bull Housing also is looking weak. I think that can see a slide to around 1270 zones. Stop about 1320.
Okay, all right, Prakash, if we have Ashwani with us, Ashwani, I want to put another query across to you. You're shorting, I remember Raymond and Senchi Textiles, both of them became darlings in some part of last year. Now things have changed around a whole bit and nothing really is a darling. You're shorting Raymond today. If you could give us a sense about Senchi Textiles, well, the stock has corrected from around that 1450 odd levels. What are the, how is that chart looking? Is it breaking down? Is it looking to find support after a correction of around 15-16% or more than that?
See, basically everything that went up becomes vulnerable. Senchi Textile has broken its 200-day moving average. So it's in for a sharpish correction. Next support maybe is around 1,050, 1,100. So even there on rallies, people can short. As far as Raymond is concerned, again, very sharp rally we saw, in the last year. And a lot of that chances are will get given up. It bounced back once from the 200, which was about 860. I think a retest of 860 at least should happen on Raymond.
All right, gentlemen, thanks very much for joining in. A fresh FIR, we understand, has been registered against the Gitanjali Group, of course, in the PNB fraud case. So that's the latest news. The way to a CNBC TV18 exclusive, then Lata Venkatesh caught up with the Dean of New York University's Stern School of Business, Rangarajam Sundaram, who says that volatility spiking is just a symptom of the markets adjusting to a new reality. He does add that he's not surprised by the PNB fraud case and actually sees no good ideological reason for remaining invested in nationalized banks.
Volatility spiking is one symptom of the markets adjusting after 10 years of being in a stupor to adjusting to a new reality, to the fact that money has a greater cost than they imagined. It startled me when I saw this, but did it surprise? No, we've seen similar things occur in allegedly sophisticated financial institutions worldwide. You remember the SocGen case when Jerome Kerviel lost 5 billion euros, what was then $7 billion. He was not even supposed to be trading. Now, how does a non-trader trade $7 billion worth? His notional positions were $50 billion, and SocGen systems could not track it. We've seen this happen repeatedly, time and again. I think this is a global problem, and yes, what happened at PNB was awful, but I think we should be careful not to make too much of it. I mean, I think all banks need much better risk management systems than they have in place today. The nationalization of banks that occurred in a big wave, particularly in 1969, was historically a very different period from the one we are in. Banking then affected very few people. Most people were outside the formal economy. And issues like we're nationalizing banks to make them more socially responsible resonated. We are now in a completely different world. And it's not obvious that if you look at today's world, nationalized banks have any natural role to play in what is going on. The private banks have thrived precisely because they're able to provide services to large numbers of people that people find attractive. Is there any good ideological reason for holding on to nationalized banks? My personal opinion, again, probably not.
In other news, MSCI has condemned the move made by Indian exchanges to cut off supply of data to the SGX. The index creator and manager says the move is negative with respect to accessibility of the Indian equity market for international investors. MSCI says the restrictions are inconsistent with the practices of any other market in their emerging market index series and could result in unprecedented trade disruptions in markets around the world. MSCI notes that Indian exchanges have also announced a new requirement of a written pre-approval on the issuance of certain ETFs and ETNs, but the full scope of restrictions is not yet clear. MSCI acknowledges that Indian exchanges do not seek to impose a disorderly wind down of products, but adds that disruption is expected given the breadth of the changes that they want. But the most important part is that MSCI says under its market classification framework, anti-competitive measures will receive a negative score, given that such measures may limit the range of financial instruments available to international investors. They say that this in turn can actually limit the cross-border market access as well as reduce the hedging options for foreign investors. And in fact, MSCI has warned that the measures may result in a change in India's market classification and strongly suggests that Indian exchanges and SEBI reconsider this unprecedented and anti-competitive action.
All right, Sumera. Well, we need to just focus on the markets for a tad bit longer. Now we're on the verge of breaking the 10,500 odd mark. So keep an eye out on that front. Well, we're slipping a tad bit actually. I think a couple of stocks are dragging us lower as we speak. Let's get them up for you. India Bulls Housing Finance, I think our ticker team as well is keeping it alive over there. IndusInd Bank as well has slipped close to around 0.5%. Now it was trading more or less flattish when we started off the show. We have Hero MotoCorp, Bajaj Auto as well are taking a bit of a knock, and maybe Fortis as well should come up for you. Remember, it started off well in the green. From the top, it's seen a sharp correction. Why is that? Because it appears that again there's another stumbling block in terms of that deal going through. And that's why, in fact, the stock, after opening up closer towards 150, it's corrected close to around 10% from the top. Trying to find some green. Divi's Laboratories, let's get that up for you. Well, that's giving you some green at least on the screen. It's spiking up as we speak. And the other one that I'm looking at is Bombay Burma. Volumes as well picking up on that stock. So keep an eye out on Bombay Burma. That stock as well is seeing a bit of a spike in the last few. Sticking with that story over the last few days, now we learned that the CBI has registered a fresh FIR against a Gitanjali group of companies. Utkarsh has been on top of that one. Utkarsh, fill us in with these fresh details. The stock is locked in lower circuit.
So, Nigel, this is the second FIR which is being filed by CBI, and this is based on the complaint by Punjab National Bank on the 13th of February. So remember that Mehul Choksi was anyhow a part of the FIR, but Gitanjali Gems as a company was not a part of the FIR till now. But what we are picking up from CBI is that they have filed a fresh FIR. In fact, a new raid across offices of Gitanjali Gems has taken place. There are these raids have taken place in cities like Mumbai, Surat, and across states. So, clearly, after Mehul Choksi's house being raided, today CBI has raided around 20 locations. This is what we are picking up. In fact, one more fresh piece of information coming to me right now is that CBI is estimating that the loss to PNB in this whole case has been somewhere around 4,500 crore rupees. This is the fresh information coming to me right as we speak to you. So clearly, CBI, ED both now upping the ante when it comes to investigations. ED yesterday did searches around 17 locations and has seized somewhere around 5,100 crore rupees of money. What we're also picking up is that the ED has issued summons to Nirav Modi and 4 others. So clearly, both investigative agencies are now upping the ante when it comes to investigations in this PNB fraud case. We'll have to really wait and watch. We'll try and get you the copy of the FIR on what are the charges against Gitanjali Gems here, because that will be important. But any news and update on this, we'll keep you on track with this.
All right, Utkarsh, thanks very much for that. Varun Beverages coming out with numbers. Losses have narrowed actually on a Y-on-Y basis, but not looking, actually even on a EBITDA level, they've made a profit this time around. There's about a 20-25% bump up on their top line as well. So not too bad, but the stock not reacting favorably to that number, down about 1%. But there's more news flow as the current IRDA chairman retires on the 21st of February. The selection process for a successor is picking up pace. Yash has the details. Yash.
Well, the race for the next IRDA chairman is getting increasingly interesting as we move closer to that date of February 21st when the current chairman retires. Now, the latest that we're given to understand here is that the selection committee, which is headed by the Cabinet Secretary P.K. Sinha, has shortlisted around 8 candidates for the position of next IRDA chairman. Now, in terms of candidates which have been shortlisted from the insurance industry, we are told that G. Srinivasan, who is the chairman and managing director of New India Assurance, as well as very interesting name, Mr. V.K. Sharma, who is the current LIC chairman, have been shortlisted for the next IRDA chairman's position, as well as if you talk about the bureaucratic section, from there 2 very interesting names have come up. We are given to understand that Mr. Rajiv Sharma, who's the Chief Secretary for the state of Karnataka, has been shortlisted for the position of next IRDA chairman, as well as Ratna Prabha, who's the Chief Secretary for the state of Telangana, has also been shortlisted. Now, from this particular point, we're given to understand that as we move forward over the next 3 days, interview process will take place for all these shortlisted candidates, and a final announcement of the name of the next IRDA chairman can be expected anytime post February 18th.
Okay, thank you. Let's take a look at commodities, where you have the gold and silver prices actually closing this week on a positive note. We've gained nearly 3% for the gold prices in this week, and this is the best weekly gain that the gold prices are putting on in last 2 years actually. Last week, same time, we were trading around $1,305 to $1,306 per ounce, but holding around that $1,360 mark in the European session right now. Himanshu Gupta of Karvi now joins us to talk more about that. Himanshu, what is your sense on the precious metals as a sector, because we are headed on a very strong week?
Thank you. Good afternoon, Manisha. Well, clearly we have seen some strong buying coming in both gold and silver after the inflation report is out from the US. And the way the markets are holding up the crucial resistance of $1,350, $55 per ounce in the short term, we expect further upside in the gold prices going ahead. The investors should be eyeing upon 1380, 1385 as the next crucial resistance. The weaker dollar and the firm inflation are the factors that are supporting gold prices in the short term. Talking about the MCX levels, 30,580 would be a good level to enter fresh longs. 30,800 to 31,000 are the expected targets, while a stop loss below 30,480 is recommended stop loss.
Himanshu, is there anything that you are picking up in the industrial metals as a space? Because almost all the metals, like the likes of nickel, which is up 7% this week, copper is up 5.5%. We've seen zinc prices gain 5% this week. So anything that you are picking up yet again before the week ends or for the next week now?
Yes, Manisha, we have seen a good interest picking up in nickel and steel-related metals. Zinc and nickel, both for that matter, are looking strong to us. Although the physical demand continues to be on the slower side since the Chinese markets are on a break, so we think that the mild correction in nickel is over after slipping to 830 levels, and one can initiate fresh long positions around 890, 892 levels and the targets of 930 and 940 can be expected in immediate short term. A stop loss below 880 would be recommended in nickel.
Okay, all right. Thanks so much, Himanshu, as well as Manisha, for joining in and giving us all those details. Well, keep an eye out on the markets. 10,500. We have defended that mark, but we're virtually at the low point of the day. We'll wrap up on Halftime Report. You stay with us.